For businesses with a lot of leftover profit, how can they reduce their tax bill?
Well, we always want to have lots of leftover profit, but you're right, we don't want to pay taxes on it. Number one answer I always give is buy an airplane, but people give me a lot of crap about that, but you can do that. Here's some things people don't think about, and this has to do with the kind of business structure you have. An LLC, an S-Corp, a partnership, whatever that is. If you have an LLC, you cannot create your own pension plan. You can only put into a 401k and a SEP, self-employed pension. If you're an S-Corp, you can actually create a pension, like an old-fashioned pension, and put tons of money in there. So you see, if you're having a year like that and it starts to get up there, and you are an S-Corp, then start talking to somebody in the middle of the year to set up that pension, because boy, there's nothing better than being 30, 40 years old and putting $75,000 into a pension. By the time you retire, it'll be worth tons and tons of money.
Okay, so I don't agree with him on the airplane, because you'd actually have to have business purpose for it, and I've known more people that regretted that decision, unless you're really using it for your business. But as far as the pension, I mean, he's wrong on a couple of things. A sole proprietor can actually set up a number of different types of retirement plan, including a SEP, which is called a simplified employee pension plan. So when he says that a SEP can't have a pension, that's not true. It's just, generally speaking, you're almost always going to have an S-Corp if you have high income, because it's going to lower the employment tax. And you're going to do something called a defined benefit plan, where you're defining the amount you're contributing based on the amount that you're making, as opposed to some set amount by the IRS. So a typical plan is called a defined contribution plan, where you're defining how much I can put in. So like $7,000 a year for an IRA, $23,000 a year for, for a 401k on the employee side. Like, there's all these different limits, and they move around every year. They're indexed for inflation. That's defining the contribution. The benefit is when you say, hey, I'm making $200,000 a year. How much do I need to have put into my retirement plan so I can take $200,000 a year out when I retire? And how much can it, because of that, how much can I contribute this year? Is it $300,000, $400,000, $500,000, $600,000? And the answer is quite often yes. It depends on how old you are and how much you're making. But yeah, that's called a DB plan, and you could do that through any type of entity.